Deficit hawks have warned about dire consequences from the growing U.S. public deficit for at least the last 25 years. And look, anyone who's heeded their warnings and avoided the financial markets over that time frame has missed out on some quite favorable returns. So I know I sound like Chicken Little when I state with a high degree of conviction that the risks are actually rising quite quickly. When it comes to national debt levels, no metric is perfect, but the debt to GDP is the most time-tested. In the U.S., we were at 57% back in 2000. We got to 101% just prior to COVID in 2019. We're currently at about 122%, but on our way to 150% by 2028. Greece, at the time of the beginning of its financial debt crisis in 2009, was at 127%. To me, we got a pretty significant warning last summer when bond investors recoiled at the immense treasury supply that was needed to finance the deficit. We had some rough treasury auctions. The 10-year treasury yield went from 4% to 5%, a little under 4% to 5% just in a couple of months, and triggered a pretty significant equity correction. Now the 10-year then sort of that momentum reversed pretty quickly once the Fed pivoted to a far more dovish stance, but we have to recognize that we can't count on that going forward. There are a lot of reasons why interest rates could stay relatively high, including if inflation remains somewhat sticky, meaningfully above the Fed's 2% target. So the conclusion here is not that concerned investors need to automatically run for the hills. Ongoing deficit spending can have implications across asset classes, from managing the duration of bond holdings to the mix of real assets and alternatives that you have, to just understanding the importance of having strong financial management at the companies in your equity portfolio. And look, for all the political polarization in the country, the most encouraging thing that I can say is that we do have solutions. I can almost promise you that they are going to involve some combination of spending cuts and higher taxes, and almost definitely some structural changes to some of our entitlement programs. Those things are hard, but they're going to be necessary. And ultimately, I think this will be a classic case of the Winston Churchill quote, his famous quote that you can always count on the Americans to do the right thing, only after they've exhausted all of the other possibilities.